Nvidia's stock has dropped 20% since the beginning of 2025, despite strong performance in its chip business. This raises the question, could the market be signaling a slowdown in the excitement surrounding generative artificial intelligence? Let's take a closer look at what the next 9 months could mean for this industry leader. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. When a company's stock starts to decline, poor business performance is often the first suspect. However, that hasn't been the case for Nvidia. The company's latest earnings report for the fourth quarter shows a business that remains strong. Revenue surged by 78% compared to the same period last year, reaching a record-breaking $39.3 billion. This growth was primarily driven by its data center division, where Nvidia produces high-performance AI chips designed to train and run large language models. Although Nvidia originally built its reputation in the gaming industry, its data center hardware has now become its most valuable product line. The company's latest AI chip, known as Blackwell, is estimated to cost between $30,000 and $50,000 per unit. Despite the high price, these chips offer major improvements in power and efficiency over previous models, potentially helping customers reduce operational costs. According to CEO Jensen Huang, demand for these chips is extremely high. However, not everything is running smoothly. Nvidia saw a slight decline in gross margins, which dropped 3 percentage points to 73% in the fourth quarter. This decrease was likely due to short-term challenges tied to the launch of its new Blackwell chips. Company leadership expects this trend to continue in the first quarter, with margins dipping further to 71% as production scales up. As of now, Nvidia's stock has dropped 14% since its earnings release on February 26th. This decline suggests that, despite its strong growth and the successful launch of its Blackwell chips, the market remains unimpressed. Some might attribute this to lower profit margins, but the bigger concern could be long-term demand. In February, Microsoft made headlines by canceling some of its data center leases in the U.S. Microsoft is considered one of Nvidia's largest customers, and reducing its data center capacity could signal a shift in its approach to the industry. While Microsoft is unlikely to abandon artificial intelligence, CEO Satya Nadella has stated that AI has yet to generate significant value. If a key industry leader expresses such concerns, other major Nvidia clients, such as Alphabet and Meta, may be having similar discussions behind the scenes. Another major concern comes from OpenAI, one of Nvidia's top clients. Recently, OpenAI finalized a deal with TSMC to produce custom AI chips, reducing its dependence on third-party suppliers. These custom chips are designed for specific workloads, making them more efficient and cost-effective compared to Nvidia's general-purpose GPUs. If major companies start scaling back AI investments and shift toward custom-built chips, Nvidia's long-term growth could face serious challenges. Nvidia, with a market value of $2.6 trillion, is already a massive company. Looking ahead, significant growth may be limited, especially as concerns grow over challenges like declining profit margins and potential drops in demand. However, a major decline in the stock price during 2025 also seems unlikely. Currently, Nvidia has a forward price-to-earnings ratio of 25.5, which is only slightly above the NASDAQ 100 average of 25. This suggests the stock is reasonably priced, helping to lower the risk of a sharp decline. Unless there is a major economic downturn, such as a recession, Nvidia's stock is expected to remain relatively stable throughout the year. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.